In this video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar for the week and a little bit of next week too as well, plus the investor sentiment, share my thoughts and opinions. And if you do find the video beneficial and helpful towards the end, consider dropping a like. It does help the channel, so thank you so much for that. I do appreciate it. And I do post these videos up weekly, so if you want to be notified when I do post them, consider following and subscribing. And before I continue to the information, given that it's tax season, free tax USA, link down below. No extra charge to you, but it does support the channel, so thank you so much for that. I do appreciate it. It's basically the same setup in terms of TurboTax, in terms of software. They don't charge for the software, which is beneficial. And same setup, questions, all that stuff. When I compared them in the past, got me the exact same return. And they don't charge for the federal filing, just like TurboTax though. So TurboTax does not get knocked for that. But they do charge less for the state filing versus TurboTax. They only charge $15 versus TurboTax charges $20 if you file early and $25 if you file closer to the filing date. So it does support the channel, so thank you so much for using it. And again, no extra charge to you. Same setup, same refund, and all that stuff. So thanks again for the support. Now, in terms of the overall market, we have some heavy hitter things for this week. And I'm going to go high level, then go into details later on. But key takeaways for this week coming up in terms of economic calendar. On Wednesday, March 12th, we have CPI inflation numbers. And on Thursday, March 13th, we have PPI inflation numbers. And then the following week, on the Wednesday, March 19th, we have FOMC interest rate decision plus Fed Chair Jerome Powell press conference. Now, I do have a little bit of a short on my channel. Basically, it was about a minute and something seconds long. Basically, Jerome Powell stated that essentially March rate cuts are not going to happen. There's not going to be a rate cut happening in March. Plus, on the Friday, March 7th, he basically stated that they have no reason to rush for rate cuts and want to just basically see the data as it comes in. So given that, most likely, again, I'm not a professional, so please do your own due diligence and research before buying and selling. But for the most part, it doesn't seem like there's going to be rate cuts. Now, before I get to the technicals, and I'll get back to the economic calendar soon, in terms of investor sentiment from AAII, basically, bullish sentiment has been decreasing still, but slightly slower than before. We've seen major drops at 19.3% for the March 5th, 2025. And then technically, even though it has been slightly dropping, it still is quite significantly lower than the historical average at 37.5%. And then the bearish sentiment has decreased a little bit as well at 57.1% versus previous week. The only thing is, though, it's quite significantly higher than historical average at 31%. So the market relatively, for the most part, in terms of investor sentiment, is still quite bearish versus bullish. So technically more indications to down, or more anticipation to the downside to come. And I would say rightfully so for the time being. In my opinion, this current administration is good for the economy personally in terms of the upside. Just for the time being, it doesn't seem like, in my opinion, that they're 100% focused on the market yet. But what they're doing will lead to a repercussion for upside to the market. So this creates more buying opportunities, not all at once. Let's just say you had $10,000. I would not say dump all $10,000 on Monday's open. It would be more so every single time we get dips, average down as we go, because ultimately I think in my opinion, the current administration is more for the beneficial for the economy to the upside, because they're cutting government spending and bringing down the deficit, hopefully from the government spending and all stuff. And then plus I'm noticing gas prices dropping too as well, so we'll lower cost of transportation, which could lower the cost of goods. So with all that stuff later on, the economy should bounce back up in terms of, or not bounce back up, but see major growth in terms of the stock market. And I would assume that they would start shifting more focus on the stock market as well as time goes on. So for the time being, indications are pointing to the downside, especially for the 1 year, 5 year, and all chart for the S&P, NASDAQ, and Dow Jones. Now we do see upside showing for the 1 month, 3 month, and 6 month for all three of them. I'm going to show them soon. But essentially, I'm expecting that this is going to create buying opportunities, and then we're going to start going back up to the upside as well. Again, you want to essentially average as we're going down, not just buy one shot, and then you don't take advantage of the lower levels. You might obviously never see those lower levels, and we might start curving up, but the better play and the more safer play is to average portions, not all at once, if that makes sense. Again, not a professional, so please do your own due diligence and research before buying and selling. Now, in terms of the 1 year, overall high level, looking at ETF SPY, ETF for the S&P 500, we closed out $575.92. And the 1 year chart is in the bearish movement, and we're at the moving average of the 200-day moving the 200-day moving average of the 1-year chart, technically you could argue we're going to bounce up at this level, which technically based off the 1 month, 3 month, and 6 month could be the case. The only problem is if you look at the 5-year chart, it's bearish movement, strong bearish movement. Volume has been increasing more on the selling side. And then you could argue maybe we'll still get a bounce on the 50-day moving average of the 5-year chart, which rightfully so you could. But overall, indications are still pulling to the downside. So I think it would be like a short-lived bounce and then going back down to the downside. Not necessarily for the inflation numbers, unless this bounce might be legitimate. If the inflation numbers come in extremely favorable for the Fed to start cutting rate cuts sooner rather than later. If that is the case, you could see a legitimate bounce off these moving averages that we're looking at right now. And if that is the case, then the upside could be coming, with the alt chart showing potential crossover to the bearish movement, but it could be short-lived as well, like we saw back in end of 2023, where it was kind of crossover to the bearish movement, which it did come to the downside, but went back up to the upside. But you could argue, in case you're new to the channel and you haven't seen this, there was an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010. There is a heavy hitter, but it's only 2 touch points dating back since 2010, but I'll go over that when we get to it. But you could argue we bounced up during the 2023, end of 2023, more so because we're at the level of the upward trend support level dating back since 2010. But we'll see what happens for the time being as we assess it, as we go with the markets. But again, 1 year, 5 year, and alt chart, we are at the moving averages of some of them with some of the charts, but ultimately pointing to the downside. With the 1 year, with the 1 month, 3 month, and 6 month potentially showing potential bounce somewhat. So with the 1 month, it is in the bullish movement, but it technically could be short-lived, crossing over to the bearish movement potentially. 3 month in the bullish movement, still not necessarily strong, but the 6 month is pretty strong. If you look at the bullish movement right by here, its MAC line indicates if we're in bearish or bullish movement is in the bullish movement and technically could go up to the upside. The only thing is though, it's more clear on the NASDAQ. I'll show it on the NASDAQ, but for the S&P, it's almost following the same thing. Downward trend, basically resistance for the most part, and it could have some trouble passing them. And even if you extend a little bit, you can see it touches back up there too. But this is not really shown perfectly on the S&P. It's more shown in the NASDAQ. But ultimately, even if we were to go up, I'd expect the 50-day moving average for the 6 month to knock us down potentially. So if that's the case, then you're looking at $581.27. But I've seen some spike ups to $584 anyway, regardless. And we've seen it back in March of 2025, or not the March 3rd of 2025, so as of recent. So if that is the case, we see basically a spike up to 584, 581, and then come back down, and then continuation to the downside with the 1 year, 5 year, and alt chart. I am optimistic for the overall market and the current administration. The only thing is though, right now, I don't think necessarily the focus is for the market for the time being. It's more focused to get their stuff done in terms of what they want to do within administration overall. Now, in terms of the NASDAQ, it shows more clearly overall. We're going to go with the 1 year chart right now. Bearish movement, just like the S&P, at the moving average zone, basically for the most part. Could potentially bounce up, just like the NASDAQ, where we saw was at the moving average. And then the 5 year chart, just like the S&P, strong downside, volume increasing, just like the S&P, more on the sell side as well, just like the S&P, at the moving average as well. Mind you, we closed at $491.79. Again, $491.79. You could argue we'll bounce up the moving average, but ultimately with the alt chart showing potential further downside to come in the bullish movement for the time being, but it's strong indication pulled to the downside, it looks like, in my opinion, with the volume coming in more on the sell side as well. Now, the NASDAQ has the same thing as S&P with the upward trend resistance line and the upward trend support level. Breakout for 2 years back in 2020, I believe it was, to 2022. Bounced off support, false breakouts, a couple here and there and all stuff. But we are currently underneath it. Rated by here, here's the line. And you can see we've bounced off as support a couple times when we broke through it. Tried to break through it fully, but we got pulled down and below all three moving averages. If you don't bounce up soon, and then actually fully commit to the upside, then I would assume that the commitment to the downside is coming for the most part fully, unless something changes. Again, if the indications for inflation comes in extremely favorable, where the rate cuts will come sooner rather than later, I could see that pulling the markets up potentially. Not a guarantee, obviously, but that's my opinion. Now, in terms of the 1 month, 3 month, and 6 month, just like the S&P, bullish movement, not necessarily that strong. 3 month chart, bullish movement as well, maybe a little bit stronger than the S&P, but the 6 month is strong indications to the upside. So coming down to the downward trend resistance line right about here, you could see it could go up to it. I would assume it would go up to the moving average personally. So the 50-day moving average for the 6 month is at $497.46. Mind you, this should be the zone, so it's most likely going to be $500 anyway, because this average will be moving up as we move up. But that's what I would expect. Go up to that zone and then potentially further get pulled down because of the 1 year, 5 year, and all chart showing downside. But again, it could potentially reverse. Like I stated, we're at the moving averages. The one year chart with the 200-day moving average zone, give or take. The 5-year chart, the 50-day moving average, providing a good bounce off like we've seen back in August of 2024. So we'll see. If that is the case, it's awesome. That'll be great. And then we did create some buying opportunities with the dips we've seen recently, so it's not necessarily all bad overall. And then the 1 year chart for the Dow Jones, looking at it, closed at 42,801 points. 1 year chart showing bearish movement, so potentially further downside, meaning at a 200-day moving average potentially, which is around, give or take, 41,911 points. And the 5-year chart showing strong bearish movement to the downside, potentially meeting this upward trend resistance line that we did bounce off of support a couple times if you zoomed in a little bit more, and meeting the 50-day moving average as well at the exact same time. Then you're looking at potential bounce off at 41,463 points, give or take. And the all chart, just like the S&P and NASDAQ, showing downside drop potentially in the bullish movements for the time being, but could cross over to the bearish movement and arching down quite significantly. Now with the 1 month and 3 month and 6 month of the Dow Jones a little bit more stronger to the upside potential indications, which is in the bullish movement stronger than the S&P and NASDAQ, 3 month bullish movement way stronger than the S&P and NASDAQ, strong upside, and 6 month bullish movement as well, strong indication to the upside potentially. But again, it has to cross a bunch of moving averages. I think, in my opinion, it might be short-lived unless the data points show quite significant support to the for further rate cuts to come in sooner rather than later. And we'll see if the Feds do budge, because from what Jerome Powell stated, and plus the conferences that they had as the Fed overall, it's been at least 3 times they mentioned that they want to take it easy on the rate cuts and see as the data comes in, and they see no rush to cut rate cuts anytime soon, if that makes sense, until they have strong evidence to start cutting having rate cuts, if that makes sense. Now for the economic calendar, on Monday, March 10th, we have nothing scheduled. For Tuesday, March 11th, we have NFIB optimism index for the month of February. Then we have job openings as well for the month of January. Previously it was 7.6 million. And then on Wednesday, March 12th, like I stated, we have CPI inflation numbers, so consumer price index for the month of February. Previously it was 0.5%. This time around, they're expecting 0.3%. Then CPI year over year, previously it was 3%. This time around, they're expecting 2.9%, so slight decrease. Core CPI for the month of February, this just basically has energy removed out of it. Previously it was at 0.4%. This time around, they're expecting 0.3%, so slight decrease. They are optimistic for a little bit of a decrease in inflation, which is good. And then core CPI year over year, previously it was 3%. This time around, they're expecting the same thing, 3.0%. And then monthly U.S. federal budgets as well for the month of February. Then on Thursday, March 13th, we have initial jobless claims for the month for March 8th. Previously, it was 221,000. This time around, expecting 220,000. And then producer price index, or PPI inflation numbers for the month of February. Previously, it was 0.4%. This time around, expecting 0.3%. Then core PPI for the month of February, 0.3% previously. PPI year over year, previously was 3.5%, and then core PPI year over year, 3.4% previously. Then on Friday, March 14th, we have consumer sentiment preliminary for the month of March. And then be mindful again, on Wednesday, March 19th, we have FOMC interest rate decision. And also at 2:30 p.m., right after the decision comes out at 2 p.m., we have at 2:30 p.m., we have Fed Chair Jerome Powell press conference. Most likely I'll be live streaming that. If you want to be notified when I do, consider following and subscribing to be notified when I do. And that's basically it for today's video. Thanks again for watching. I do appreciate it. If you found it beneficial towards the end, consider dropping a like. It does help the channel, so thank you so much for that. I do appreciate it. And again, if you do want to file your taxes, Free Tax USA, consider using the link down below. It does help the channel, so thank you so much for that. I do appreciate it. No extra charge to you, just supports the channel. Thanks again. And that's basically it. Thanks again for watching. Take care. God bless and peace.